Hey guys, welcome to this week's stock market recap. I'm Robert Montes with Nexus Wealth Management. Today we're going to be diving into what helped the market, what hurt the market, and your key takeaways for the week of September 22nd, 2025. So first, let's start with the performance recap. Last week was a slightly softer week with returns on the S&P, the Dow, and the Nasdaq all slightly down. The Nasdaq finished down 0.7% and the S&P and Dow were both down less than 0.3%. Now, as far as positive factors last week, these three things really stood out. First, the second quarter GDP growth got revised up to 3.8%, which beat expectations. This basically means the economy is growing stronger than we thought, giving everyday families more room to breathe with things like better job opportunities, easier spending on everyday items, and a bit more overall financial stability at home. Second, August personal income climbed 0.4%. This was higher than forecasted, and real spending went up the same amount. What this shows is that consumers like you and I are still powering the economy forward, which translates to families seeing slight increases in their paychecks and feeling more confident about covering bills or saving for the future. And third, the labor market stabilizing. We saw jobless claims come in lower than expected, hinting at solid job security for families and businesses. These numbers typically reflect a sentiment that it's easier for Main Street families to plan ahead without worrying as much about layoffs or economic surprises. Now, on the flip side, there are some areas that we want to pay attention to. First, the S&P's 30% rebound since April's lows has built up massive momentum, but it also increases the chance of normal pullbacks. This is to be expected. With the market's increase since April, it's only normal to expect some pullbacks. Think of it as a normal pause after a productive work season where you regroup and reorganize before continuing on again. The second thing that put on pressure in the market was the rising odds of a US government shutdown. Unfortunately, this has become a normal part of government practice, and we face similar situations nearly every year since 2013. These shutdowns can produce some short-term uncertainty. However, it's nowhere near the panic levels we saw 10 years ago in similar situations. And finally, inflation has been putting pressure on the returns we've been seeing. While it's not nearly as high as the 9% we saw back in 2022, it has been sitting at around 2.7 to 2.9%, which is above the Fed's 2.2% target. Guys, as someone who's also juggling work, family, and life in general, here's what I think are your key takeaways. First, that solid GDP and spending growth screams economic strength. Lean into that with your planning. Second, steady jobs means real security. With these two things, I think it's the perfect time to peek at your retirement accounts. Consider increasing what you're saving by a percentage or two, and maybe look at a target date fund in your 401k as it may simplify your investment strategy. Whether you're a busy professional, a mom juggling career, family, and finances, or you simply want a fresh perspective on your wealth strategy for you or your company's 401k plan, drop me a message. I would love to be a resource to chat with you about how we can help you thrive. Thank you so much for watching. We'll catch you on next week's recap. Take care.